What's up everybody? Tom here with another video. In today's video, we'll be covering everything to do with the stock markets right now around the world. We'll also be taking a look at our technical analysis levels for the S&P 500, NASDAQ, Bitcoin, Tesla, silver, and the volatility index to try to find out what's happening into this FOMC event. As you all know, Papa Jerome is ready, but will he bring the big guns? Stay tuned. All right, guys, one of the best places that we can start when taking a look at what happened in the stock markets is to understand the movements throughout the sessions. And yesterday started pretty well in the NASDAQ, pretty well across the board. And it was really all about tech. And then at the end of the day, it was less about tech. There was some selling into the close. Specifically, the Russell, the back 2000, the smaller companies, wasn't that strong, 1.67% down. When we take a look at the actual sectors, it was more of still tech is the strongest sector for the day, communications as well, and then energy and financials and industrials were the really declining areas throughout the session. And this is interesting as well to see consumer discretionary there, which is XLY, because that's been something that's historically strong when you're talking about getting checks out. And of course, people are now starting to receive their checks. It's estimated that $40 billion and a lot of cryptocurrencies are benefiting. If anyone was looking at Cardano yesterday, Coinbase, of course, said, yes, we're going to use it. I think it was already rumored. So it's so surprising how you can get this information well before it happens. Then Coinbase approve it and it goes up 20%. There's always an opportunity in those crypto world trades. Let's take a look at the volatility index into this event. So for anyone that's trading the stock markets right now, be warned, tomorrow is, of course, the FOMC conference. This is an important news event, and there will be some volatility around that time. So if you're trading on a small chart, you need to be aware of that. VIX, or volatility index itself, for the S&P 500, hovering right around that 20. Few people have it sitting at 20. Few people have it sitting at 19.8. It went down as low as 19.3, a new actual low since the pandemic began. So volatility is coming out of the market for now, but it's right around that support into a very important news event. We'll continue to watch this throughout the next couple of sessions and in our pre-market live stream for, of course, the Wednesday open. Let's have a look at dollar index, the all important dollar index. It hovers between the zone. We still have 91, 95, 96 as the resistance. Yesterday we spiked up, again met with selling pressure, and we're going to probably hover around this area ahead of the meeting. This meeting will really change the way that the dollar index is perceived for the next coming weeks, if not months. And that's why it's hovering at a critical point. 91, 96, worthwhile having on your chart, as is the support down here at 91.40-ish. If it closes below that, then we could be seeing serious downside pressure all the way back to the 90 zone. And that will have a lot of ramifications for your gold and silver trades. Now, what's going on with Bitcoin? So a few people are getting worried about Bitcoin and its current declines. Well, firstly, 4-hour 20 is usually one of the best buy zones on the way up for Bitcoin. We know this. But what about on the way down? We've now reached the 20 moving average from the bottom up, as in the price is moving up from going a bit lower. It's finding some resistance at the time of this recording, and it's been stuck in this area or stuck in this zone. I've mentioned where I think the heavier support is, which is around this 52,000, 52,200. And there are a few reasons for that. One of them being the 200 simple moving average, the green line, is a very decent level throughout time for buying through Bitcoin. So it's happened a few times where it's come down to this area, found pressure, and when you have a support, a horizontal support, and a moving average at the same zone, it gets a little bit stronger. So there should be buying pressure down here for the bad side of Bitcoin. And at this stage, it's watch and see. If there's an engulf to the downside, that will probably trigger into the sell. We'll have to get more information. Yesterday, notice during the live stream, we had this shooting star, but we got the follow through, but no bearish close. It actually closed bullish and then went back to this resistance. So it's all about the close confirmation on the relevant time frame that you're doing the analysis on. Let's take a look at silver. Silver's pretty boring at the moment as well. It came underneath the trend line. It is now on the two moving averages, the 20 and the 50. And what's important about these moving averages, I got asked this question, is when they're so close at a point of resistance or support, they act as what we call dynamic resistance. And this means that The market is pressured here and sellers continuously sell against this price. So buyers buy it up, they then sell here, and then the sellers take control. And as long as that happens, it puts downside pressure. At this point, it could be that if we break underneath these last little wick lows, you can see them here, that we go down to the 25. But when we break out the top and we close above this zone, it should get back through the trend line and move into the 28. And I'm sure many silver buyers will be very happy with that. It'll be a wild 24 hours for silver and gold traders into the FOMC event. US 10-year treasuries, where are they? Right at resistance into the news event. It's where these things like to be. 1.625. Here it is. Some supports over there. It got through our first initial one, which was 1.4, and it looks like it's on the trajectory at this stage to the 1.952 level. The treasury yields are hyperextended. It is in there so far away from the 20 exponential moving average here on the weekly, but it's not unusual for this to occur. Look at the left-hand side and learn from that to get an idea of what's going to happen on the right-hand side. 200 simple moving average, right around the 1.95. I would not expect 10-year treasuries to get any higher than this. And just remember this whole time people have been freaked out about what these treasury yields are doing to the market, yet the US 100 has actually recovered somewhat, even though the bond or the treasury yields in this case have actually continued to increase. So it's a catch-22 of what you read in the media versus the reality of learning from the left-hand side to make better informed decisions on the right-hand side. Tesla bulls, a little bit sad yesterday. We did get that bullish pressure, but I'm going to explain to you by looking at the NASDAQ why the selling pressure came through. For Tesla bulls, it's all still about 660 holding. We've now got a 200 simple moving average on the 4-hour, one of our favorite swing trading or swing investing kind of areas. 660 hopefully holds, 676 on the close. It moved up a little bit yesterday. It tried to hold that 700, tried to get through. If we go down to the 15 minutes, you'll see what I mean. Every time it came to 700, it was buying, and it just wasn't able to make a new high. At the same time as that was occurring, what did the NASDAQ do? Well, the NASDAQ moved to exactly the resistance we expected. This area here. This was our target, and it was around that 13,300. It was reached and then instantly rejected in the market, causing a bit of a flat day, barely up for the NASDAQ. It just shows great TA can work out, and that every single one of the stocks that's to do with that index, e.g., the NASDAQ in this case, Tesla, and other large companies that are in tech, etc., were declining after this point was reached. Look at the US 100, 13,300 was reached. Then it came back down, found support at the 13,123, previous support, and we're basically trapped within a range for now. Now, if you see the NASDAQ go past 13,300, we've mentioned that several times, is a very bullish signal. In fact, that is so bullish that we should return to previous highs. So go back to the 14,000. This is the last left-hand side information area of structure before 13.6, and I'm not even sure if 13.6 is that strong. It should move on to hopefully new all-time highs. So FOMC is keeping it down for now. What will be said, we don't know, but most likely it'll be as much as possible to calm the markets. We know that that's what Papa Jerome and everybody else is trying to do. They're trying to calm the markets whenever possible. 2050 exponential moving average has crossed here on the daily on the futures. I don't take too much importance in that, but when you go back through history, you'll notice that we didn't even get a cross down all the way since April. So this was the first almost cross down. They were kind of like floating with each other. They did technically cross, but not that much. And now they're crossing back up. So this is the first cross down. Now cross back up. Will we get the V shape? Will we get the market going down and then quickly recovering back up? History has said yes, and April is coming. But again, the FOMC will be the catalyst either way. So let's now take a look at the S&P 500. What's going on here? Well, we need to remember that there's a lot of rotation going on in the markets right now. That is that the finance and the energy sector were strong during the recent decline and tech was weak. And now tech is relatively strong, but finance and energy are a little bit weak. And that means that we don't actually have that much movement in the price. I've drawn a Fibonacci here between the low and this current recovery since we had that low early in March. And it looks like any pullbacks might come into maybe a 38.2 or a 23.6 fib. There's just no other real structure. We've got that previous resistance. We've got the 39.30. This area here has found buying pressure. We'll have a 4-hour 20 meeting it at the same zone. So if there's sell-off pressure, I'd hope the 39.30 holds, and I would hope this 23.6 fib holds. Now, if it doesn't, and it moves back further, 38.2 fib into the 50. You guys know I love this area for picking up the retracements through the market. And any further movement up is going to hit our trend line. So I think 4,000 would be broken. It would go towards our multiple touch trend line, which has been beautiful resistance across the board. And it's one of the best TA lines that I've seen in some time. So have that on your charts and always pay attention to something so strong, because it's just been a great indicator before the market has declined. And it's been a very, very good day trade and swing-based trading system. Let's have a look at the US 500. What's going on in the futures? Well, they're trading very, very similarly. 39.63. As you can see, lackluster. The VIX is sitting around 20. Everything is awaiting the FOMC. And you should have that on your calendar. If you don't use Market Watch's calendar, Forex Factory is also a good place to check out. And you can see here the FOMC statement. Now it's 5 a.m. my time here in Australia. You can set it to your time, your daylight savings zone, everything like that. They'll be talking about the federal funds rate, the press conference, the statement, and economic projections. So we'll come at you tomorrow with another video. Please join us tonight. Wednesday morning open on the stock market. It's going to be awesome. We're going to be talking about cryptocurrencies. We're going to be talking about commodities and everything in between, including stocks. We'll see you there, guys. And we've almost approached 50,000 subscribers, and that's thanks to each and every one of you. So if you enjoy the video, make sure to subscribe and hit that like button. Bye for now.